Hello, everybody. I'm Peter Julian, Member of Parliament for NewWestminster-Burnaby, and you are my bosses, constituents of NewWestminster-Burnaby. Welcome to our annual disability tax credit. Can I ask at the beginning, is anybody here from outside Westminster and Burnaby? Okay, everybody here is from New Westminster? Anybody from Burnaby? Okay. Thank you for coming. I would like to start off by acknowledging I'm speaking to you on the traditional unceded territory of the Kakite First Nation and the Coast Salish peoples. It is in their traditional unceded territory that we live, work, learn, and play. And it's important now more than ever to acknowledge the importance of Indigenous peoples in the development of our community and right across our continent. I wanted to thank you all for coming out and give you a bit of sense of how the next couple hours will unfold. First off, we will have a presentation on the disability tax credit. That will take a little less than an hour. And then from there, we will basically, I'll be available and my staff team will be available for another hour to talk about specific cases. Often people will come with specific information that they need, or they may have applied for the disability tax credit and not received it. So the second half is much more informal. We will have coffee and donuts. If you want to stay for the informal discussions, that's fine. But a lot of people come for the information that's in the disability tax credit, and that's why we give this presentation every year. This is an important presentation because the government doesn't want this information to get out. 10 years ago, former Harper government stopped the presentations that CRA was giving to the public about this. And the current government continued the practice. So it's really important to get this information out. As you will see, there is often a lot of money that is owed to people with disabilities and their families. And only about 40% of the people who are eligible for the tax credit and the registered disability savings plan actually know about the programs and apply for them. So we do this presentation every year, both in Burnaby and New Westminster, to make sure that the other 60% know about the programs. And after the presentation today, I'm actually going on the road tomorrow. I'll be in Cowichan, Malahat, Langford, Southern Vancouver Island, and then in Nanaimo tomorrow, giving the same presentation because we want to get this information out to everybody across the country. The federal government, if it owes you money, it's important that you know about that. And that's why we give this presentation every year. Can I ask who has been to this presentation before? If you have, raise your hand. Oh, a few of you? Good. Okay. Terrific. And I did want to reach out to Deepak and Susan from New West Television. They're filming today. Please give them a round of applause because they do great work in the community, getting this kind of information out. Thanks so much to New West Television for being here today. Okay, well, we'll get right into it. Michael is going to be doing the changing of the slides. Thank you, Michael, for doing that. And we have Silas and Monica, who are our American Sign Language interpreters here today. Thank you very much for being here as well. And we will start right off with one of the first years we gave this presentation. We've been giving it now for 16 years. Hundreds of people have been coming to these disability tax credit workshops. In fact, a few weeks ago with Jagmeet Singh, we did one in Burnaby at Windsor School. There were over 200 people there. And here's George Doring, who has passed away now, but he attended one of the first of the disability tax credit seminars. And he said he didn't know about there would be relief from the federal government until he came to the meeting. And he was able, after his doctor attested to this particular form that we'll be talking about, to get a credit for the preceding 10 years. My tax credit amounted to $13,012.52. Over $13,000. What is very unfortunate about this is the federal government doesn't tell people. They didn't tell George that they owed him $13,000. He had to come out to the seminar and apply. and then receive the money. And that's why we do this every year, because every year we have dozens of families that access sometimes retroactive tax credits, sometimes it's the Registered Disability Savings Plan. We estimate that there have been over $5 million returned to our communities of New Westminster and Burnaby as a result of these tax credit seminars that we give every year. That's why it's so important that you came out today. And at the end of the program, I'll also talk to you about getting that information out to your friends and family and neighbors. Thanks, Michael. So what is the disability tax credit? A disability tax credit is a non-refundable tax credit. What that means is it reduces your income tax to be paid or gives you a rebate on income tax paid. And it helps to reduce the income tax that people with physical or mental impairments or their supporting family members may have to pay. If the DTC total is more than the amount that an individual owes on the taxes, CRA will not refund the remaining amount of the credit. Now, you'll find out a little bit later on that it's actually a transferable credit too. So other members of your family can take advantage of that. There are two main steps to getting the disability tax credit. First, applying for the credit, we'll come back to that in a moment, and then claiming the credit on your tax return. So the question of who is eligible. I've had a couple people come up to me even today and asked, well, if I have this condition, do I qualify? If I have this condition, do I qualify? It's not based on the condition, it's based on an impairment on daily activities of everyday life. These are activities that you perform. And regardless of what the impairment is, it's the impact on those daily activities that may qualify you for the disability tax credit. So what are those daily activities? Well, it's the things that we do every day. It's vision, it's speaking, it's hearing, it's walking, it's elimination, bowel and bladder functions. And my friend George, who applied, he got that $13,000 check from the federal government. In his case, it was bowel functions that had an impact on him and qualified him for the disability tax credit. It's feeding, it's dressing, it's mental functions necessary for everyday life, and we'll come back to that in a moment as well. And it is a cumulative effect of these limitations, and it can also include life-sustaining therapy. So anything that has an impact on your daily activities of living could qualify you for the disability tax credit. So the marked restriction in any one of those categories, like feeding or dressing or walking, basically how the Canada Revenue Agency interprets that is the following. You're unable to do the activity, you can't do the activity at all, or it takes you 3 times longer than someone of similar age without the impairment, even with the use of therapy, medication, and devices. So if it takes you 3 times longer than somebody of your age to do that same activity, you can qualify. And if you're not able to do the activity at all, you could also qualify. Now, this is a restriction that has lasted or is expected to last over a year. So for example, somebody who had a car accident, I've had people come up to me at these seminars and ask, I had a car accident for 6 months, I had a disability, I went through rehabilitation, now I'm okay, but can I qualify for the disability tax credit for that 6 months? And the answer, of course, is no. You have to have had a disability that lasted at least a year, or your doctor expects that it will last at least a year for you to qualify for the disability tax credit.
No.
Now, if we can go on to the next one, Mike? Yeah. So there's also the cumulative effect of significant limitations. If you have a limitation in 2 or more categories of those daily activities that we talked about a little bit before, like feeding and dressing and walking, if you have limitations in a number of those categories, the cumulative effect can also qualify you for the disability tax credit. And that's when the disability is present about 90% of the time or more. Even when you have therapy or devices or medication, that disability is present about 90% of the time or more. Now, what about life-sustaining therapy? Because I also mentioned that. It's the activities of daily life, it's cumulative impacts, and it's also life-sustaining therapy. This can be a therapy needed to support a vital function, needed at least 2 times a week. So it could be kidney dialysis, it could be lung therapy. Those things would qualify you for the disability tax credit. And that therapy is needed for an average of at least 14 hours a week. So again, the impacts on activities of daily living, feeding, dressing, walking, it is a cumulative effect across all of those categories. Or it can be life-sustaining therapy, even if you don't have a disability, but you need to go through kidney dialysis or lung therapy for at least 14 hours a week, you can qualify for the disability tax credit. So how do you get that then, the disability tax credit? Well, at the entrance, we have copies of this disability tax credit certificate. The form number is T2201. And if you want a copy, if it's not available here, we can certainly send you online as well a copy of this disability tax credit certificate. You need to find your medical practitioner, your doctor, for example, to testify to ensure that you are qualified. Your doctor is basically saying the medical conditions, the impact on those activities of daily living that I just spoke about, they qualify this person for the disability tax credit. So it's not me, it's not anybody with Canada Revenue Agency, it's your doctor. But it can also be other types of medical practitioners. A nurse practitioner, an optometrist, an audiologist. My wife is a clinical audiologist. She sometimes fills out these forms as well. It can be an occupational therapist, a physiotherapist, a psychologist, speech language pathologist. All of those specialists can also fill out this form. But really, the step one for the disability tax credit is to take the form to your medical practitioner and make sure that they fill it out. 2 points I'd like to make on this form. First off, I mentioned earlier, mental functions necessary for everyday life. Sometimes people will ask me, well, Alzheimer's, would that qualify a person for the disability tax credit? And if you look at the list of mental functions necessary for everyday life, it includes memory. And yes, if your practitioner, your doctor, says that it has the impact on a person, on you, as stated in the manual, you would qualify for the disability tax credit if you or a loved one has Alzheimer's. Final point I'd like to make is this. The doctor has to write in their name and their address and their number and sign it. And you have to tell them that they have to write like a normal person. You know, often doctors, they go to medical school, they write chicken scratch. If it's not readable, then your form will be rejected. So get them to write like a normal person, not like how they may have learned to write in medical school. So submitting the application, you've been to your doctor has signed off the form. You can then come by my office. How many of you know where my office is? It's down under the New West SkyTrain station downtown. Most of you do? Okay, that's good. Yeah, it's just under New West Shops, right at the New West station on Carnarvon Street, right behind the old spaghetti factory. You can bring your form by there, or you can send it through online account to CRA, or mail it to the Winnipeg Tax Centre post office. And remember that you can send it at any time of the year. Now, my friend George, when he came out originally, he waited 6 months before he went to his doctor. And then, after that, he said, well, I'll wait till the next tax year before I submit this. So he waited another 6 months. He submitted it a year after he could have submitted it. Now, that being said, he actually had a disability since 1960, but you can only go retroactively back 10 years. So he lost a year of eligibility. How much money did he lose? Anybody have an idea? He lost $1,300 because he waited a year. So don't delay. We do this tax credit seminar every year around the time of tax filing. But if you go to see your doctor immediately, submit it as quickly as possible, particularly if you've had a disability for more than 10 years. The earlier you submit, the more years you get credit for. And that can mean more money in your pocket. Thanks, Michael. So after the application is submitted, the CRA renders a decision. They will tell you what years you're eligible for the DTC, and you'll have to submit a tax form saying that you want your previous years revised. We have that information at my office, so you can get that if you want once your disability tax credit has been approved. But if the application is denied, don't give up. As I mentioned earlier, sometimes it's just because the doctor wrote chicken scratch and the CRA is unable to follow up and validate or confirm the doctor's name. So if it's rejected, we'll fight on your behalf. We don't win all the cases, we win a lot of them. And if the application is denied, come in and see us. And we'll fight for you to make sure that CRA doesn't deny you unduly. If your doctor has said you qualify for the disability tax credit, CRA should not be denying you that credit. So we talked a bit about the fact that this is a non-refundable tax credit, that it serves to reduce your income tax paid or to give you a rebate on your income taxes paid. But there's an interesting component that is very helpful to families, and that is you can transfer the amount. So if you don't pay taxes, and you don't have any taxes paid in the past for a rebate, you can transfer the amount to a family member that you depend on for at least your basic necessities of life. It can be your spouse, it can be your child or grandchild, your parent, grandparent, your brother, sister, uncle, aunt, niece, or nephew. All of those family categories apply. The only stipulation is that they live under the same roof as you. And in the Burnaby event that we had a few weeks ago with Jagmeet Singh, there were a number of families where they'd had a member of their family who didn't know about the disability tax credit, but didn't pay income tax, but other members of the family did. And so the amount was transferred. And those families are going to get, in both cases, $14,000 back within the next few weeks. So the transferability is very important. Under the same roof, you can transfer the amount to somebody else, and that is really a major advantage in terms of the disability tax credit. And so we are trying to make this, the NDP is fighting to make it a refundable tax credit. But in the meantime, the fact that you can transfer it still means that it can often be very useful for you. So claiming for the disability amounts, that's where it can make the difference. Claiming for the 2022 tax year, both in terms of those disability amounts 18 and older and 17 and younger. Michael. So to claim the DTC on your tax return, you can claim for yourself, you can claim for a dependent, you can transfer it, as I mentioned, as well. And the medical practitioner fees, the question that often comes up, doctors more and more are charging to fill out this form, unfortunately. If they do charge and you're not able to find another doctor that is willing to fill it out for free, you can still expense that, and we'll come back to this in a moment, as a medical expense. Thank you, Michael. And this shows some of the amounts that you can claim up to 10 years in the past, but the current amount, the 10 years back, will be about $14,000 that we'll come back to. And so that is the disability tax credit. I'm going to come back, just give a quick summary. Again, it starts with the T2201, this form that we have available for you. You go to see your medical practitioner, get them to fill it out. Once it is approved by your doctor, you send it into CRA. Once CRA approves it, then you get your tax years revised back until the point where your disability started. And from there, you then can claim the amounts. And if you don't pay taxes and haven't paid taxes in the past since your disability started, you can still transfer the amount to a member of your family who lives under the same roof. So the interesting thing about the disability tax credit is not just the tax credit itself, it's the fact that it opens the doors to a number of different programs. And here again, this is why the government doesn't like to talk about this too often. One of the key programs is the Registered Disability Savings Plan. Now, the Registered Disability Savings Plan has an age cap that we believe is discriminatory, and we're pushing to raise that. But regardless of the age cap, it can make a real difference in the lives of a person with a disability, particularly younger adults. It can make a significant difference. So the Registered Disability Savings Plan, to access the plan, you have to qualify for the disability tax credit. So the disability tax credit opens the door to the Registered Disability Savings Plan. And it is a savings plan that is really designed to assure the long-term financial success or foundation for a person eligible for the disability tax credit. What is fascinating about the Registered Disability Savings Plan isn't the fact that families can contribute. That I think is something that is very clear to all of us. But it is the fact that the federal government also makes contributions. Now, what would you say if I told you that a person with a disability could get up to $90,000 from the federal government? Would you believe me? No, okay. Well, here, I'll explain to you how that works. So there's two federal programs designed to supplement funds in the RDSP. Canada Disability Grants and the Canada Disability Savings Bonds. The savings grant, savings bond, investment income, and proceeds from rollovers are included in the beneficiary's income for tax purposes when paid out of the RDSP. So you get the money into the RDSP. Once it starts being paid out, there is, if the money that you take out is above a certain threshold, you are taxed on it. And that's something I do want to underscore. First, there is the Canada Disability Savings Grant. And this is a grant that the Government of Canada pays into a Registered Disability Savings Plan. The government will pay a matching grant of 100, 200, or as high as 300% on the beneficiary's adjusted family net income and the amount contributed. So an RDSP can get a maximum of $3,500 in matching grants in any 1 year. That's over a 20-year period. The maximum is $70,000 over the beneficiary's lifetime. $70,000. Now you understand why the federal government doesn't want to talk about this program. $70,000 in federal government grants that go in to help to assure the financial future of that person with a disability. Now, the beneficiary RDSP can receive that grant on contributions made up until December 31st of the year in which the beneficiary turns 49. So there's that age limit that we've talked about. You can, again, apply retroactively. If you're under 49, apply retroactively for the amount. That's up to $70,000 in matching grants. But there's more. There's also the Canada Disability Savings Bond, and that's paid directly into a Registered Disability Savings Plan. The government will pay a bond of up to $1,000 a year to low-income Canadians with disabilities, and that is even if no contributions are made. So for a low-income person with disability, even if the family doesn't make any contribution at all, you can get $1,000. And if the family makes a $1,000 contribution, they can get a 300% matching amount. That's another $3,500 on top of that. that can be $4,500 a year over a 20-year period until the cap is reached. So the lifetime bond limit is $20,000. Again, the bond can be paid into the RDSP until the year in which the beneficiary turns 49. And again, the amount of the bond is based on the beneficiary's adjusted family net income. So you can see $70,000 in grants, $20,000 in bonds. That makes up to $90,000 as a foundation for a person with disabilities' financial future. Now you know why CRA doesn't like to talk about this program. It's a very important program. So the RDSP, the beneficiary can be, for example, somebody who has responsibility for that person with a disability as well. And the contribution limit for the family, in addition to the federal grants and bonds that I've just spoken about, is up to $200,000 over the course, again, of the person with the disability's lifetime. So that can make a big difference. You can open an account for the RDSP if you're a legal parent of the beneficiary, a guardian, tutor, or curator of the beneficiary, or another person legally authorized to act for the beneficiary. And it can also be a spouse, a common law partner, or a parent as well for opening an RDSP. One important note for an RDSP, we have institutions in this area, credit unions and banks, that are very good when it comes to the RDSP. We have other credit unions and banks that don't understand the program. I would suggest you shop around. If you're opening up an RDSP account, either for yourself or for a loved one, go to a couple of financial institutions, ask them about the plan, ask them their experience on the RDSP, because the financial institution is going to have to do the follow-up. They're going to have to make sure that you're getting all of the money into the plan, including retroactive payments on things like grants and bonds. And if you are dealing with a financial institution that doesn't have the experience, they are not going to get you the same amount of money as a financial institution who has that experience. So make sure that they know what they're doing before you open your account with them, and you'll benefit enormously from that experience. Now, when you withdraw it, regular withdrawals from the plan must begin by December 31st of the year you turn 60. Thank you, Michael. And that, in the case where a person with a disability passes away, there is a retroactive clawback on the grants and the bonds up to 10 years in the past, but the remaining amounts are then available for the estate of that person with a disability. And so what that means is, over time, the grants and bonds help to provide supports for the person with a disability, but also can benefit the family on an ongoing basis, even if that person with a disability passes away. So we just talked about the RDSP. Again, you need the disability tax credit in order to access it. Shop around, make sure that you have a financial institution that understands the importance of the RDSP, and make sure as well that you're opening it as early as possible in the life of a person with a disability. Because of the age cap of 49, you want to move immediately to open that up. But ultimately, it's a good program because you can get up to $70,000 in grants, $20,000 in bonds, up to $90,000 to assure the financial future of your loved one who has a disability. And this is a program that makes a big difference in people's lives. That's why we tell you about it. Now, the final sector is on medical expenses. I'm just going to talk about some of the medical expenses for a person with a disability that you might not be aware of. We often hear about medical expenses as being the typical medical expenses when you buy medical equipment, things like that of that nature. It's actually important that there are some big ticket medical expenses you may not have thought about or may not be aware of. And if, again, because these are non-refundable, if you have paid income tax in the past, or if a member of your family has paid income taxes, these are items that may result in a significant reimbursement on past taxes paid, or reduce your taxes to be paid. So if we go to the next one. So the common medical expenses that you're aware about is things like attendant care and care in a facility, things like medical devices, medical equipment, medical supplies, prescribed drugs, gluten-free food products is something that people are not aware of. If you have to have gluten-free food products, you can actually claim the difference between the regular price of food and the gluten-free products. That is something, as long as your doctor has attested that you need gluten-free food products, you can actually claim that as a medical expense. That can add up. Service animals, services, and fees also count as well. Things that you cannot claim for medical expenses include athletic or fitness club fees, birth control devices, blood pressure monitors. Everybody here is beautiful, but if you take cosmetic surgery to be even more beautiful, that doesn't count. You can't claim that as a medical expense. And what you need to do is keep all of the receipts to ensure that you can claim the medical expenses. That is very important as well. Now, if you can go back just one, thank you. So medical expenses can include a number of things. For example, if you have to renovate your home in order to make it more accessible for a person with a disability, you can claim that amount as a medical expense. And sometimes these costs are in the thousands of dollars. So renovations in the family home to make it more accessible, not to increase the value, to make it more accessible for a person with a disability, those amounts can be claimed. And often when I give these presentations, somebody in the back will say, oh, we got renovations done last year. It cost us $10,000. We didn't know we could claim that. Yes, you can. As long as you have the stipulation that it's a person with a disability, it had that impact, and that's why you needed to renovate your home. Same with an automobile. You have to make adjustments to your automobile so that it can accommodate a person with a disability. Those expenses, up to $5,000, can be claimed as well. And here's something else. If you're a person with a disability and you have to move to get accommodation that is more accessible, the moving expenses of up to $2,000 can be claimed as a medical expense. So all of those expenses are vitally important to claim. If you've had any of these big ticket items, changing, accommodating on the vehicle, renovations on the home, having to move to get a more accessible home, a more accessible apartment, all of those things can be claimed retroactively as a medical expense on your income tax return. So these are all the things that you need to take into consideration. When we give these presentations, the reason why people find them often useful is because, again, Revenue Canada does not map out all of the things that would make a difference in the lives of a person with a disability, even though we have some programs that can actually make a difference. Now, these are some of the programs that can make a difference. Now, I did want to take a few moments before I close off the presentation to talk about what Jagmeet Singh and the NDP, what we have fought for people with disabilities in the last two budgets. Last year, you may be aware that we pushed the government in a minority parliament to put into place substantial investments for affordable housing, particularly targeting seniors and people with disabilities. Those funds last year were set aside to build 150,000 affordable housing units across the country. We're starting to see some of that money trickle out, and we're pushing hard to get it out as fast as possible. But we will see that having some impact in the coming months. And the budget that came out this week, there were two things that we pressed for. One is a national dental plan for people with disabilities and for seniors. You'll recall last year we put in place a dental plan for children under 12 and under. We wanted to extend it this year to youth 18 and under, seniors, and people with disabilities. And we forced the government to put that into the budget. So by the end of this year, for people with disabilities who finally have access to the dental plan, it actually amounts to the first extension of our healthcare program in for over 50 years in Canada. So that is a significant, a significant improvement. And so we will be getting information out to you as you are my bosses. We'll be making sure you're aware when the launch date is. It will be sometime later this year, and how you access the dental plan. Final, and this is automatic, so you don't need to think about it, is the grocery rebate or the doubling of the GST credit. You should be seeing for lower income Canadians, particularly people with disabilities, coming out over the next 6 to 8 weeks with the next GST credit, a doubling of that credit, which is to help offset the rise in the cost of groceries. We fought for that as well. The government had to put it into the budget. And so those are three measures that have helped people with disabilities. We still continue to fight on the Canada Disability Benefit. This is something that we passed legislation on, but the government needs to put the money together for that. And I'll just mention some of the funds that are being spent now by this government and the previous government. We saw the banking industry getting bailed out during COVID. It was $750 billion. That's billion with a B. And that was decided within a week. The previous government had put over $100 billion into maintaining bank profits. And we saw with overseas tax havens that we're losing $30 billion a year. So what we're saying is, let's close these loopholes and let's put the money in to help seniors, people with disabilities. Let's make sure that Canadians are taken care of. And that's why we will continue to press so that the Canada Disability Benefit becomes a reality. So those are some of the things that I'm working on. I'm reporting back to my bosses in terms of people with disabilities. You've heard about some of these programs as well that are important. I just wanted to see if anybody had any specific questions on the presentation before we wrap the presentation up, and then we will go to having the individual meetings with people, individual cases.